जी स्टार्ट करिए।
Hello everyone, a very good evening to all of you. Welcome to today's live webinar on budget session on GST, where we will be discussing the key GST changes proposals in the 2025 Union Budget. As you all are already aware that on 1st February 2025, our Honorable Finance Minister presented the Union Budget outlining several important tax reforms. Whether you are an individual taxpayer, a business owner, or a financial professional, understanding these changes is a crucial aspect. Today, in this session, we will be breaking down the proposals, examining their potential impact, and answering your questions to help you navigate this year's budget with confidence. Let us start today's session with an introduction of our speaker, C.A. Shiva Goyal. C.A. Shiva Goyal is a distinguished speaker and a fellow chartered accountant who is also a guiding light in the realm of indirect taxation and auditing domain, hailing from Rohtak, Haryana. With over a decade of extensive experience, Shiva Goyal has established a formidable reputation as a highly acclaimed speaker who has shared his insights in more than 100 sessions at esteemed forums, taxpayer associations, and ICAI branches nationwide. As an esteemed MCS faculty member of ICAI, he imparts his wisdom at various branches of NIRC while also serving as a meditation and soft skills trainer. Moreover, Sir has also been invited by prestigious institutions such as the Haryana GST Department and the Central Government Training Academy for IRS officers, where he enlightened senior officials on the critical GST aspect. His exemplary contributions have been recognized with the Rashtriya Gaurav Award presented by former Lok Sabha Speaker Mrs. Meera Kumar and the Young Entrepreneur Award 2022 bestowed by the Indians Achievers Forum. Sir is also a prolific author. Shiva Goyal sir has co-authored a handbook on GST impact on real estate sector and has participated as a panelist in various MSME events, further exemplifying his commitment to knowledge dissemination. Equipped with credentials including a PGDBA in finance from Symbiosis Pune and various other certifications and diploma in ISA from ICAI and diploma in IFRS from ACCA UK. So this was a short introduction of our today's speaker. Over to you, sir. You can start with the session now.
Okay, I think as we start,
Yes.
uh, there is some issue. So just let me,
Sure, sir.
yeah, just give me a minute. Huh?
Sure, sir. No issues at all. Hi, everyone. We'll be back in 2 minutes.
See if I'm audible. Yeah. Yeah. Now is it okay?
Yes, sir.
Yeah.
It is perfectly all right now. I think we can start
So,
the session.
without much delay, it is already delayed by 10 minutes. So, the budget has come, budget 25 with the new hopes, new aspirations, and the market is very happy. Not with the GST, but specifically, I would talk about the income tax amendment that has come a long way. But today the session is not on income tax that has happened, I think, a 1 hour before, or today it was scheduled by Educating. I thank Educating platform for having me here as an indirect tax faculty to deliberate on the indirect tax amendments in the Union Budget 2025. So just forget about 12 lakh exemption limit in income tax and let us focus on the GST part. So let us first understand that in the budget, whatever GST amendments have come, that was already recommended in the 55th GST Council meeting. As you know, no amendment can come up without the any recommendation or the approval by the GST Council. So, जो GST का budget I would say that comes probably 4 times in a year rather than the income tax budget comes once in a year. तो जीएसटी का तो हम पूरे साल में जब भी काउंसिल की मीटिंग होती है तो दैट इज अ बजट ओनली बिकॉज द लॉट ऑफ अमेंडमेंट चेंजेस आर कमिंग दैट वे. So let us discuss the GST amendments. So there are total of 14 amendments in the GST in the indirect taxes in the Finance Bill 2025. I'm talking about Finance Bill because it's a draft. It has it will be passed in both the Lok Sabha, Rajya Sabha, will receive the assent of the president, only then it will become an act, and then the respective amendments will take place in the CGST Act or the rules framed therein. So let me start with the sharing of screen, and let me just show up that what are the particular amendments that have come up. Yeah, so let me just share the screen. Yeah, yeah. I think all can share, all can see the screen. So there are like 14 amendments as such in the CGST Act which has been suggested. In the bill, if I talk about in the bill, then if you read individual amendment, you won't understand what is the background, or why the amendment has come into play, what is the logic of the amendment into amending the relevant section. But if I will take you to the handout that I will just share on my screen, then you will easily understand that what was the intent of the amendment. So rather than going by the finance bill, you all must be having the copies of finance bill. It was circulated on the WhatsApp. Otherwise, we will also circulate, no issues. Uh, so all these, there are little amendments, not so much amendment in the indirect taxes, unlike direct taxes, but whatever amendments are there that are very important and particular to understand that. So I will just open up one PDF which is I think should be discussed as of now, and with all the insights and everything, I'm just opening that and discussing with you one by one. So you can see this is the indirect taxes amendments impact and insights. So we will discuss. I have categorized into 10 points, and each point we will discuss. Then 14 points that were there in the finance bill, that all will be covered in these 10 points. So nothing to worry. All amendments are being well covered here. So the first amendment I'm talking about is the definition of local authority. You know, in different places in the GST, there is the term government entity, government authority, state government, central government, that has different relevance in the exemptions and the GST rates per se across the act. So the term local authority, there was a clarification that was being sought by the particularly by the DDA, Delhi Development Authority, and there was a confusion in the definition of local authority. So as per the so I have categorized into three parts: what was the current provision, what is the proposed provision, and what is the impact of the proposed provision. So we will cover up, and we will cover up in a little fast manner, because all know what is the current provision. Proposed I will talk about, and then the impact we will discuss, like due to the proposed amendment, this is the impact that is going to come. So local authority currently, it means municipal committee, Zilla Parishad, district board, or any other government authority legal entitled to uh, entrusted by the central government or the state government with the control or management of a municipal or a local fund. So now the municipal or local fund, you can see this municipal or local fund. These words have been replaced with municipal fund or local fund to explicitly distinguish between the two. Earlier, municipal or local fund were not being distinguished properly, but now the amendment has come and they have introduced municipal fund separately and the local fund separately, with the two explanations inserted in the finance bill. So you can see they have further defined what is the local fund, what is the municipal fund. So local fund means any fund under the control or management of any authority for discharging civic functions in relation to panchayat area, or vested by the law with the powers to levy, collect and appropriate any tax by whatever name called. And municipal fund means this is. So why these explanations have been added? This is to bring clarity in the law, that what Local authority means and what is the actual control of the management of the municipal fund or the local fund. If you see, so local fund में it uses panchayat area vested by the law, whereas in the municipal fund it says the discharging civic functions relating to, in relation to the metropolitan area of the municipal area. So here comes the difference. Otherwise the definitions are same, because in local fund, panchayats are there, and the panchayat area is there. But in the municipal, in the nagar nigam, in the city, there is a nagar nigam basically. So we can see in that particular area the municipality area is defined with the municipal corporation. So that has been defined. And there was a circular that has come, circular number 245. Circular has clarified that an authority which is similar to elected self-governing body, such as municipal committee, and which is entrusted with the control and management of municipal or local fund, can be termed as the local authority. So circular just came 3 days before the budget, but in that circular, uh, they have defined and clarified local authority. But now, through this finance bill amendment, they have changes. They have made changes in the act. They have brought municipal fund, replace the wording municipal with the municipal fund or local fund, and they have added the explanations there too. So I think this amendment is very much clear, and I have also written here the circular which is relevant with the proposed amendment, which has already come. Now, next, we will discuss the amendment related to the voucher. So you can see the voucher amendment and the circular has recently come, and there is a lot of joy in the market. Like, there was a lot of DGJ raids that were happening in the past, considering the vouchers as a taxable vouchers, or authorities are trying to GST charge GST on the value of the voucher, irrespective of the commission, in addition to the commission charges. But circular has already come. So what is the background of this amendment that is coming into play? Let me just take the help of the circular first, then I will come to the proposed amendment in the finance bill. So you see, circular number 243 was issued where the certain issues pertaining to GST treatment of the vouchers were clarified. So a big relief to the industry was provided, wherein it was said that transactions in vouchers cannot be considered either as a supply of goods or as a supply of services. So it was a big relief to the industry, as GST won't be leviable on the vouchers as they were considered as neither goods nor services. However, whereas these vouchers were distributed by the sub distributors, the dealers. So the persons who were acting as an agent, in that case, they were charging some portion of commission, and on that commission, GST is leviable. Apart from that, in case there are certain additional services such as advertisement, co-branding, or support services. In all those cases, GST was leviable on the specific service, whatever the name may be, advertisement, customization, or co-branding, anything like that. Whereas no GST appears to be payable on the redemption of voucher, because there was no underlying goods or services. So, as it was held by various high courts, there was certain uh, high court cases also. So they said that that vouchers are neither supply of goods, not supply of services. So when vouchers have been defined as neither supply of goods or nor supply of services, then I can say that was there a need for timing provisions or the valuation provisions of the vouchers, taxability of the vouchers. So the time of supply of the vouchers was governed by, uh, you know, uh, section 12, which deals with the supply of goods, and section 13, which deals with the supply of services. So now, specifically, amendment has come. They have removed the 12.4 and 13.4 section of the CGST Act. That means the provisions have been omitted relating to 12.4 and the 13.4. That means when underlying goods, underlying vouchers are not, are not taxable. So the time of supply or the place of time of supply of goods or service specifically to the voucher 12 that was earlier in 12.4 and 13.4 are no more needed. That will only add to the confusion, and due to this only the amendment has come, and this particular provision will be now governed by the general provisions, not by the specific provision, due to the reason that circular has already clarified that in the 55th GST Council meeting, that these are neither goods nor services. So correspondingly, amendment to bring amendment into the act, the proposed amendments have been brought by the finance bill. I hope this is very much clear to all. Now the third amendment we will discuss, retrospective amendment to block input credit used in construction of immovable property. Who doesn't know this amendment? Currently, as we all know, there was a safari retreat judgment that was pronounced by the Honorable Apex Court, Supreme Court, wherein they have differentiated about plant and machinery or plant or machinery. Currently, the existing provisions, there was written as an ITC shall not be available for any goods or services for the construction of any immovable property on his own account when used in the course or furtherance of the business. Further, an explanation defines the term as plant and machinery, not plant on machinery, as fixed to the earth for making the outward supplies. That excludes land, building, and so explanations further. So in the Finance Act, the proposed amendment has been used to change the phrase from plant or machinery with the plant and machinery with effect from 1st July 2017, so that the said phrase may be interpreted as per the actual intent of the law, that was plant and machinery and not plant or machinery. So as you know, in Safari Retreat, the Honorable Apex Court considered plant owned machinery in a different way, uh, and plant and machinery with a different way. So, to overrule this judgment of Apex Court, Safari Retreat, this proposed retrospective amendment is being proposed in the finance bill, that will further be uh, gaining the approval of the both the houses, and then the president assent, and that will become act. That means now the act is very clear that they are not in the mood of giving any ITC on the construction of plant and machinery or the construction of the land civil structure. Come what may, the term plant and machinery has been replaced. Plant or machinery has been replaced with the phrase plant and machinery, and now the council or the CBIC is very clear on the fact that they won't give ITC on the goods or services for the construction of immovable property. So I think uh, the background is has been mentioned by me in a very detailed manner. The highlights of Safari Retreat has also been mentioned in a detailed manner, and the 55th GST Council meeting already gave approval to this legislative amendment, and now the council approval uh, is being legitimated through the amendments in the finance bill. So I think uh, council already deliberated a lot on the this particular issue. Uh, Apex court judgment is very elaborative and detailed, wherein you can see they were considering plant owned machinery. They were they Apex court gave certain instances that how to give a uh, plant and machinery, how it would be interpreted, but not withstanding anything given in the court order or decree. The council has come up with the retrospective amendment, and they have, you know, changed the retrospective amendment with the word and these are the certain points that are for consideration. I will just circulate this PDF. You can well read out all these things, and that are for food for thought. Thus all these things are still for consideration. सर अब जो आईटी से हमने लिया हुआ उसका क्या होगा, या कभी हमने आईटीसी लेकर के रिवर्स कर दिया था तो उसका क्या होगा, या हमने आईटीसी को पार्क किया हुआ यूज नहीं किया तो उसको क्या होगा. सो with all due respect to all dignitaries, all GST experts are giving different interpretations to the or the opinion to this act, but I would give my suggestion that now the council is very clear on this part, that by giving retrospective amendment, government is very clear that there is a blocking of ITC on that part. So I think in case the ITC has been reavailed to just uh, bypass the timelines of the ITC, so I think ITC should be reversed now. In case it was availed and not used, then also it should be reversed, because the government's intention is very clear. So it will further add to unnecessary litigation. It will further add to lots of uh, uh, litigations part, and lots of deliberations and all those things. So in case one is okay with the litigations and still want to avail ITC with lots of exclamation marks, then he can do so. Otherwise, conscious call should be made. The next amendment is the RCM supplies under the input service distributors. And in this particular amendment, Finance Act 24, the definition was already amended, and a reverse charge uh, invoices for services liable to tax under reverse charge were already included for distribution of input tax credit through ISD mechanism. However, services under reverse charge were included by reference to the CGST Act only. Means in Finance Act 24, that took only the reference to the reverse charge under CGST Act only. But now the definition and the provision of ISD mechanism have now been proposed to be amended by insertion of the reference to the 5.3 and 5.4 of the IGST Act. So expressingly that allows ISDs to distribute ITC on the interstate supplies that are subject to reverse charge mechanism. So now it is very clear that along with the ISD on the along with the ISD in the CGST Act, the corresponding amendment has been made in the IGST Act itself. So the impact of it we can study now. So impact is this. Impact is this. that previously in the input service distribution provisions, the service taxable under RCM for all entities in the multi-state presence on the same PAN. Thus, ISD registrations are required to be taken in compliance for distributions of ITC with effect from 1st April 25 for such entities. However, the provisions proposed to be effective from 1st April 25 gave contemplation whether ISDs could distribute ITC on interstate reverse charge supplies or not, because that mentioned only in the CGST Act. But or so now the interstate or the intrastate the amendment has the earlier the amendment was made in CGST Act only, and no reference was made to the reverse charge under IGST Act. So there was a confusion that whether ITC on interstate reverse charge supplies could be distributed or not. So now the amendment has removed that anomaly and given clarity in that regard that interstate and interstate transactions are under reverse charge at par in context of the ISD mechanism. So the proposed amendment in the bill in the IGST Act is for the level playing field in the CGST Act, and that is removing the anomaly or the confusion that was there in the market key that whether it is for interstate only or not so all the anomalies are being removed, and this provision, this amendment has brought clarity to this. So there is a query. So meaning ITC cannot be claimed now even though there is a Supreme Court judgment for letting out the property. So already amendment has come now because there is a query I am answering. They have particularly mentioned that notwithstanding anything mentioned in the court or order. So they have overruled the Supreme Court judgment now. So once the Supreme Court judgment has been overruled, now you can see there is no reason as uh, to claim the ITC or to avail the ITC. Even then, if anyone wishes to claim, then it should be done with very uh, caution and with very uh, exclamation marks. But I would rather suggest not to take any risk, understand the case. It has to be on a case to case basis, and then a conscious decision has to be taken. The next amendment that has come in the indirect taxes is the condition of ITC reversal by the recipient by the credit notes on the credit notes. So earlier we all know that existing provisions for reduction of liability on credit notes has a condition that no reduction shall be permitted if the incidence of tax has been passed on to the other person. Uh, when a supplier has issued a credit note, he is already reduced the output tax liability, and correspondingly amendment is being made that reduction shall be permitted on account of credit note when if ITC is if availed has been reversed by the recipient where the recipient is a registered person. So now it has been mandatory that in case of reduction of output tax liability, the recipient must also reverse the ITC in case the recipient is a registered person, or in all other cases the incidence of tax has not been passed on to the other person. That means that uh, if credit note has been issued and any person is receiving the 100% tax amount, then he is already passing the tax liability to the other person. Then how come the reduction of output tax liability benefit should be provided to that unregistered person? So to that, for plugging in that particular part, the clarity has been made in the explanation of the condition has been put that ITC must be reversed where such recipient is a registered person. Second, the incidence of tax has not been passed on to the other person. Earlier, only this incidence, condition was there, but this registered person receive ITC reversal, but the recipient was not there. So this is also being proposed in the bill. So I think now provisions allow for the issue of credit note on account of excess taxable value in the invoice, sales return deficiency, or post supply discounts. All will be covered. So certain food for thought or explanations have already been given in the handout, and please read out thoroughly, and all these things will be very much clear by reading just handout in a detailed way. Although because the session is up to 7:30, so I have another meeting at 7:45, so I will be discussing all the amendments at a very uh, base level, so that you all participants who are viewing on YouTube live or even afterwards can see what actually an amendment means, and what is the actual amendment that the budget 2025 is brought for the for all of us, for the industry, for the trade. So we have covered five amendments till now. Now we are moving to sixth one. Invoice management system, IMS. Educating has already organized, I think, a separate course on IMS or a separate session on the IMS. So I will not go into IMS, but to give a brief background about IMS, that what is the proposed amendment. So, GSTN has brought out a very, fantastic, amazing facility for all the taxpayers, invoice management system, wherein your 2B will be generated through IMS, invoice management system. In that IMS, you people could see that in that invoice management system, one had to accept or reject, or has to keep it you could have kept it pending, but or rejected, but you have to generate 2B from that IMS functionality. Until and unless you were not opting for 2B generation, 2B was not being generated, and 3B correspondingly was not being filed. But all the legal practitioners, CAs, advocates had this point in mind, that where is the legality of that IMS? Merely GSTN is coming with an advisory of the system that doesn't have any legal backing. So why should we follow that? Why it should be made mandatory? Like 3B return has been correspondingly defined in the act itself in a section. So it has a legal backing. So now, to give legal backing to the invoice management system, the amendment is being made. The basis of the 2B is being revised, and enabling provision has been brought into the act with the proposed amendment. So now you see the flow. Uh, 55th GST Council meeting already recommended this kind of provisions. IMS की functionality you can see on the screen. Uh, there is a R1, 2B, 3B. So R1, as soon as the supplier is filing R1 by the due date, then 14th 2B is being generated. IMS, you can accept, reject, no action, or keep it pending, but you have to generate the uh, 2B in the IMS. Only then it will be generated. And based on that IMS, the 2B is being recomputed. You may reject certain ITC which is not belonging to you due to various reasons. Then you recompute, then that ITC that you rejected won't flow to the 2B. Then you will not be able to claim it in the 3B. So all these processes are being uh, implemented for hard locking 3B. For output tax liability, or figures will flow from R1. For your ITC will flow from To be uh, so your outward is fixed, your ITC is fixed, then only you have to see all things are okay. Means in a now GST has put up advisory that we are not hard locking 3B as of now. We will notify when it will be hard locked. But you see, once the 3B is hard locked, you don't have anything to amend. You can just view this is the tax payable, this is the ITC bill, and this is the net tax to pay. Only you have to see and preview and just file the 3B. So government is trying to automate all these things, and government is trying that uh, whatever you have to do, you do it in R1 or you do it into 2B. 2B, they are giving you IMS facility where you can accept, reject, or keep it uh, action or pending. You take steps then, and then once you take steps for R1, they have brought 1A also to amend R1. To amend ITC, they have brought IMS and giving legality to that. So you see, they are giving you one chance to amend your file details. Then R1 through amendment R1A. Then ITC which is flowing to the into 2B, you can recompute it by taking action, and you can recompute it. So government is giving you one facility in the earlier days to recompute it, but now you say in 2B there we need again amendment. So that is against the objectives of the bigger objectives of the revenue, that they want the 3B to be fixed, hard locked in the times to come, and people only pay tax and just file the 3B. So why this is happening? Because of the lot of bogus billing that came into the GST law, people misutilize the provisions. All these things are happening. To reduce litigation, IMS is being given legality. So this is the you know legality or the things that is coming up, and I think due to implementation of the legal provisions or the basis of the generation of 2B, now we have to give and due respect to the IMS, which were earlier in a initial phase, then recommendatory, and now it is being mandatory with the time, and all have to follow the provisions very strictly. So earlier in the model GST law, I would just say few lines. There were GST 1, 2, 3. So you see, on a similar way, the things are happening with a different nomenclature, R1, 3B, R1, 2B, 3B. So you see, the objective and the approach is little same as was earlier in the model of the GST, but now with the different it took 7 years for the GST to come out at this stage, but you see now it is more or less streamlined. There is no reason of any differences between R1 3B or something like that. You people just need to file R1 consciously, uh, select to make 2B ITC availment or rejection consciously, and 3B is all done, all prepared. So now return filing is nothing more uh, very tricky or something that very difficult or something. It's very easy. It's something that uh, anyone can do it. Anyone can do it. So now you need to be strong on the legal parts rather than into the compliance practice. Keep on filing returns, but I think in the times to come, 20 financial year 24 25 onwards, you will find very less notices on the compliance part, like in the 17 18 18 19 19 20 21 बहुत से नोटिसेस आ रहे थे मिसमैचेस के R1 3B में डिफरेंस है जी, R1 में ये है 2B में ये है, एंड लॉट ऑफ थिंग, बट यू सी 24 25 26 26 के बाद आप देखिएगा इन ये डिफरेंस आपके रहेंगे ही नहीं, बिकॉज all things are being automated that way with the legal backing. So सर फिर नोटिस आएंगे तो प्रोफेशनल्स क्या करेंगे? So please focus on the litigations, classification practice, advanced rulings. All other things are also there in the GST. Place of supply, time of supply, you know, uh, the litigation part. GSTAT is going to come. Appellate tribunal is going to come. So lot of other things are there which professionals or the legal practitioners can really focus on and make an impact, uh, make their law strong and be a litigation expert rather than being on the compliance practice. So that is already being automated and things are coming that way. Next is enabling provision for filing of 3B. I think I have covered this also, hard locking of 3B. So they are bringing conditions and restrictions for filing of the returns that has already been 55th GST Council, it has been recommended. I think GST portal will permit filing of the 3B only after generation of 2B on the portal, which will be generated on the basis of the action taken by the recipient in the IEMS. So I think 3B maybe corresponding amendment ये करने जा रहे हैं. So they are giving full impact, full power or the legality to the this IMS system, the basis of 2B. So I think it's a welcome step and things are underway and processes to reduce the amendment and to make the things more stringent and more stricter. Then, eighth amendment is for pre-deposit for the appeals against penalty orders. As you know, earlier there was only a in the orders where the tax, interest, and penalty, we have to pay only 10% of the tax amount uh, for filing an appeal. Further 10%, if additional 10%, if you are going to GSTAT, that is recently going to be operational after certain months, you know. So I think, but what about orders where there was only a penalty, no any tax and interest? In that orders, there was no enabling provision where there was a pre-deposit mandatory provision. So now there is a amendment which says that pre-deposit for filing appeal, you have to pay 10% of the penalty amount. So, and additional 10% before the GSTAT. So you see, 10% of the penalty amount is also being recovered in case there is no tax and interest. But in case there is tax interest penalty, you have to pay again only 10% of the tax. So amendment is only being brought to the cases where there is only a penalty order. And in the cases of goods or conveyance, where there was a requirement of 25% of the penalty amount, that was too harsh. In the EVM will matter the roadside cases where the interception cases, there was a provision of 25% of the pre-deposit. So now that has been removed and a level playing field of 10% of the pre-deposit of the penalty amounts have been brought out, and that pre-deposit requirement of earlier 25% is being removed. So it's also positive amendment. Now you don't have to make 25% pre-deposit, but only the 10% of the pre-deposit for filing an appeal before the Commission pays GST, and additional 10% before the GST appellate tribunal will be made. Now come to the ninth amendment that has come as the track and trace amendment. You know, a new provision has been introduced, track and trace amendment mechanism. सर कितने मैकेनिज्म लाएंगे? कभी ई वे बिल, कभी ई इनवॉइस, कभी हार्ड लॉकिंग ऑफ 3B, कभी इनवॉइस पेमेंट सिस्टम, कभी टबैको कंपनीज के स्पेशल प्रोविजर्स. you know GST is a full of roller coaster. See, government brings provisions when there is a corresponding bogus invoicing or the bogus billing increasingly happening in the trade and industry by certain mischief uh, traders or say entry, you know. So government has to bring strict provisions to curb those things, to curb those bogus billing practices or the malpractices, I would say. So all these provisions are being brought to the act or being proposed in the act to you know to just fit line everything to just put up everything in place so that everything is tracked and traced by the department. So a new provision before use the track and trace mechanism. Sir, what is the track and trace mechanism? So the goods will be specified, number one, which will be notified by the government separately, which would come under the track and trace mechanism. So there would be a certain mechanism in form of a digital stamp or digital mark or anything like that, which will be non removable. जैसे कोई सील लगती है ना, ऐसा कुछ ट्रेस ट्रैक एंड ट्रेस होगा, कोई कोड लगेगा, इज समथिंग लाइक दैट. सो गवर्नमेंट का जो भी वो होगा, बार कोड होगा या कुछ भी होगा, तो गवर्नमेंट को एक्सेस मिल जाएगा इंफॉर्मेशन कंटेन विद इन दोज मार्किंग्स. सो अंडर दोज मार्किंग्स जो भी होगा उनको मैंडेटरी होगा यूनिक आइडेंटिफिकेशन ऑफ द स्पेसिफिक गुड्स जो भी नोटिफाई होगा उसकी पैकिंग पर वो यूनिक आइडेंटिफिकेशन नंबर की स्टैंप लगानी मैंडेटरी होगी. और जो भी स्टिपुलेटेड टाइम एंड मैनर गवर्नमेंट आपको नोटिफाई कर देगी. फर्दर, manufacturer of such specified goods must also provide details of the machinery installed at their business premises. uh, कितनी मशीनरी इंस्टॉल्ड है और जो भी इस ट्रैक एंड ट्रेस मैकेनिज्म को लगाने की कॉस्ट है वो भी उन्होंने बोला कि वो भी वही पर्सन पे करेगा जिसके पोजीशन में वो गुड्स है. तो मतलब गवर्नमेंट आपके लिए नहीं करने जा रही है, ये आपका खर्चा एडिशनली बियर करना पड़ेगा. और नॉन कंप्लायंस के लिए गवर्नमेंट ने कहा कि पेनल्टी होगी भैया कितनी, 1 लाख रुपए और 10% ऑफ द टैक्स पेबल ऑफ द गुड्स विच एवर इज हायर. और वो पेनल्टी जो होगी वो इन एडिशन होगी एनी पेनल्टी इम्पोज अंडर एनी अदर प्रोविजन ऑफ द एक्ट. सो ये कहाँ से लाए हैं सर, ये ऐसे ऐसे दिमाग में चीजें लाता कौन है सर, ये बताइए जरा. तो देखिए, जो इंडियन गवर्नमेंट है वो इंटरनेशनल टैक्सेशन को भी पढ़ती है. यूएस, यूके, यूएई, दुबई में कैसे ट्रैक होती है चीजें, तो वो सब चीजें पढ़ी जाती है. तो आप देखिएगा इन यूएई, you know uh, European Union similar track and trace mechanism is already been placed in place with respect to tobacco products and other products also. So that mechanism not only monitors the evasion of tax liability but also tracks the illicit trades and clandestine removal or bogus billing. So you see, manufacturing capacity will be monitored, how much machine is producing. So government can track how much goods have been you know uh, produced and whether the same has been sent for the billing in the GST or not. So, in the times to come, your movement is being tracked, your production capacity is being tracked. So, clandestine clandestine removal के लिए कोई चांस नहीं है. सब नंबर वन सेल्स हैज टू बी डन. So government is trying to fix up every corner with all the mechanism they can put into place so that the bogus billing or the revenue leakage is minimized. Things are streamlined. There are systems in place, and I think the compliance will be mandatory. Non-compliance, 1 lakh penalty, 10% of the tax, whichever is higher. So you see, the consequences of non-compliance is much higher. So government is trying to put everything in place, making it mandatory so that things can be come up and bogus billing be reduced to the extent possible. So track and trace mechanism is being introduced and corresponding amendments are being proposed in the Finance Bill 2025. The last but not the least, supply of goods warehoused in SCZ. So you see, entry 8A to the schedule 3 contains an entry for the supply of warehouse goods to any person before clearance for home consumption. और warehouse goods का same meaning है जो customs में है, all know. So now what is the proposed amendment? It says that supply goods warehoused in a SEZ or a free trade zone to any person before clearance for export or to the domestic tariff had been added in Schedule 3 so as to exclude such supplies from the ambit of GST. So it is very much clear now कि अगर आप SEZ या फ्री ट्रेड में भी किसी गुड्स को बिफोर क्लियरेंस फॉर द एक्सपोर्ट्स आप ऐड कर रहे हो, लेके जा रहे हो, गुड्स को बॉन्डेड वेयर हाउस में, स्पेशल इकोनॉमिक जोन में लेके जा रहे हो बिफोर द एक्सपोर्ट्स, so that is the schedule 3 item. Or amendment is again effective date is 1st July 2017 and an expression has been inserted कि भैया अगर पहले कोई आपने इसको लेकर के टैक्स दे दिया है गलती से तो उसका हम कोई रिफंड नहीं देंगे, नो रिफंड शैल बी मेड. तो उनका क्या, जिन्होंने रिफंड दे दिया, नो रिफंड शैल बी मेड. सर इससे अच्छा तो होता कि हम जो है ना टैक्स पे ही नहीं करते. तो ये तो है ही. अमेनेस्टी स्कीम में भी ऐसा ही हुआ, जिन्होंने पे कर दिया उनको कोई रिफंड नहीं, जिनका ऑर्डर पेंडिंग है उनको जो है ना रिफंड है, उनको रिफंड नहीं, सॉरी, उनको टैक्स का जो है ना वेवर है. 73 में इंटरेस्ट पेनल्टी, सॉरी इंटरेस्ट पेनल्टी का वेवर है, टैक्स टैक्स आपको पे करना है. पर जिन्होंने टैक्स ट्रस्ट पेनल्टी तीनों पे कर दिया उनका क्या, उनको कोई रिफंड नहीं है. तो आप देखिए इन सब प्रोविजन से क्या लगता है कि हमें रुक जाना चाहिए, हमें वेट करना चाहिए एमनेस्टी स्कीम को. इन प्रोविजंस को पढ़ के ऐसा लगता है. तो आप देखिए क्या इम्पैक्ट है इसका. शेड्यूल 3 में जो ये फ्री ट्रेड जोन और एससीजेड को लेकर के जो भी कंफ्यूजन थी वो बिल्कुल दूर कर दी गई है. गवर्नमेंट हैज कम अप विद द अमेंडमेंट इन द प्रपोज बिल बजट 2025 और आई हैव ऑल्सो रिटर्न द इम्पैक्ट एंड इनसाइट्स. तो अगर आप इसको पढ़ लेंगे तो आई थिंक ऑल थिंग्स विल बी वेरी क्लियर, डैम क्लियर, एंड all these amendments will be very clear with the intent of the amendment first, and then you read out the proposed provisions and you will have an analysis or the clarity that how the amendment is being brought into picture. So I think I have discussed in a very brief way, given the time constraints, all the important amendments that have come in the budget 2025. Uh, 14 amendments are being proposed. I again say आप ये फिनेंस बिल पढ़ लीजिएगा, आपको बिल्कुल क्लियर हो जाएगा. मैं एक पीपीटी भी आप सबके साथ शेयर कर दूंगा जिसमें कि ये सब जो अमेंडमेंट्स है पीपीटी की शेप में भी आपको मिल जाएगी, सो दैट आप इसको थोड़ा सा टेबुलर फॉर्म में या थोड़ा सा रिविजनरी या इजी लैंग्वेज में भी आप इसको स्टडी कर लें. सो I think we are done with the all the amendments in the budget 2025 that were specifically related to the indirect taxes. So I request now educating team to please share in case any queries in the YouTube live is there. So we can discuss the queries. Otherwise, thank you so much for giving me the chance to speak at the budget amendments that have come on 1st of February 2025, and we are having a session on 3rd of February 25. So you can see educating is so prompt to organize such sessions for the benefit of the members at large. Direct tax separately, indirect tax separately. So they are coming with the separate sessions for the benefit of the members. So I think all the viewers to in case they have any query, they can reach out to me at my email ID or mobile number. I am just sharing my email ID and the mobile number. So in case you have any query or anything that you want to discuss, you can discuss with me. And apart from that, I think there are certain amendments that have uh, already recommended by the council meetings, 55th GST council meetings, and we can see there are a lot more things that have been precisely uh, come in the form of legislature to give legal power, legal backing to the act or to the rules or to the GST provisions. So I can say all the amendments are very much relevant and very much imperative at this juncture where there is a need for the circular and all those things. So I think we are done. My PPT is not working, so I'm just writing down on the whiteboard. I think if I can write down, yeah. So, educating team, are you there? Any queries are there
I think, sir. Hi, sir. I think there is no queries
as of
right now.
now?
जी जी.
So, just I'm putting up my contact number. I'm just speaking it 89504 25259. So this is my contact number and my email ID is cshivagoyal@gmail.com. GOYL cshivagoyal@gmail.com. cshivagoyal@gmail.com. So with these words, I just take leave and thank you all for your patient hearing. Thank you again, educating, for organizing a wonderful webinar session for the GST amendments. Thank you. Thank you so much. Thank you, everyone.
Thank you so much, sir.
Thank
Thank
you.
you.